financial centre based in the capital of capital. Visit adgm.com for more information.
8:21. Let's have a look and see what's happening on the markets.
The markets on Dubai Eye 103.8.
With DIB Business Banking, fulfill all your trade requirements, such as letters of credit, letters of guarantee, document advising, and much more at competitive pricing. Hashtag ready to finance.
Well, the US markets did seem to calm down yesterday. Green arrows across the US on the back of a rebound in some of those regional banking stocks that had fallen on Monday on the back of Silicon Valley Bank's collapse. Let's have a look at where we are in Asia, where it does seem that there's a little bit more optimism there as well. Again, I'm looking at a lovely sea of green arrows. We've got South Korea up by nearly 1.5%, Australia up by 0.75%.
Commodities.
With EGA, Emirates Global Aluminium, the heart of the aluminium sector, one of the UAE's most significant industries.
Oil, however, is not convinced. Where are we at the moment for a barrel of Brent? 78.48.
This is the Business Breakfast on the UAE's #1 talk radio station.
Dubai Eye 103.8.
Where we have been looking this morning primarily at the banking industry, the finance industry, and what's been done to shore up the banking sector in the US and to prevent too much contagion. But what does the failure of Silicon Valley Bank, the clue's in the name, mean for the tech sector? I'm looking at one headline now. CNBC, SVB's failure will have a ripple effect across technology for years to come. Very pleased to speak now to a man who spends his time counting the dollars and cents when it comes to what tech companies are attracting in finance. Philip Bahoshy is founder and CEO of MAGNiTT. Thank you so much for joining us.
Thank you very much for having me.
Talk to us about what this means, not just for tech companies, Phil, but for tech companies here in the UAE. Is there a knock-on effect?
So I think it's fascinating to see what happened over the weekend. There was a lot of conversation across WhatsApps, across phone conversations, and there was a real panic that was taking place. Ultimately, for people to understand, when you raise funds, the majority of times you create holding companies that are either Delaware, BVI, Cayman, and international. And as a result, you need bank accounts to receive the funding. SVB has, for a long time, been the bank of choice for many of the VCs that actually have funds themselves, as well as the startups that have raised funds. So the reality is that in many cases, companies that have raised funds in the last couple of years or tens of years have had some level of exposure to SVB if they chose SVB. One thing that some people didn't quite necessarily appreciate is that actually many of these companies are operating at a local level. So in the UAE, Saudi Arabia, Egypt, for instance. And so the immediate impact wasn't necessarily as acute as would have been in the US, because you would have likely had some cash in the accounts here locally to pay for payroll. Now that that kind of crisis has been averted, the question becomes, and I've been listening to your show, what is the impact to the wider banking industry and the wider macroeconomic environment for venture capital? And the reality is that regardless of the crisis, we have been tracking a decline in venture capital investment dating back to Q1 of 2021. This type of crisis then creates a little bit of risk aversion and risk off appetite as people want to kind of take a step back and work out what's happening at the wider macroeconomic level and how that's going to impact the venture capital space specifically.
Let's look first at those immediate consequences. You say that the ability to pay staff may not have been such a crisis for people here because they will have had money locally. What about the ability to access funds for growth and investment? What does the collapse of SVB mean for us in that respect?
So I think for now, it seems to be crisis averted, but all banks and VC funds are needing to work out how to diversify where they're allocating their money. We've started to hear the likes of JP Morgan, HSBC, even other banks like Mercury come to try and provide facilities and support for banking as a service. I think if you want to look at it opportunistically, it is really an opportunity for many of the local banks in each of these jurisdictions to provide much more efficient and startup friendly or venture capital friendly account opening processes for us to be able to use facilities at a local level, as opposed to relying on SVB that had a much more efficient process to opening accounts. In terms of the actual deployment of capital, I don't think that this necessarily affects it directly. What it does affect is the confidence in the sector and the ability for venture capital to be able to continue to grow in the years ahead, in the months ahead. I think the real challenge right now is confidence in banking, confidence in the markets, and increasing interest rates that creates a crowding out effect, whereby people are looking at more traditional and conservative asset classes as opposed to venture capital as an asset class for funding and returns.
How easy is it or not for regional startups to access banking facilities?
I think it is definitely not as easy as it could be. When it comes to local banking, naturally they have a risk mindset of SMEs and startups, which are hyper growth and have traditionally had models of negative unit economics, haven't necessarily been so easy to use bank accounts or lending facilities. I think one thing that SVB did quite effectively in the US was to provide loans and other alternate banking products that were beneficial for startups in the US. Here, it is not so likely that you'll be going to local banks for loan facilities. We, in fact, did a report with Shore Capital to look at venture debt as an asset class. And last year, there was only about 250 million across 18 deals that were being done for local startups as an alternative to venture capital. So it's still very nascent. The banks aren't necessarily focused on startups as a segment of the market. And so naturally, people have levitated towards US banks. The question now is, what are the alternatives that we can go to in a market when venture capital has naturally been receding over the last couple of quarters?
So what is the answer, Phil? What's going to make banks more startup friendly here?
I think number one is that startups in general need to become more conscious that the liquidity that was available over the last 2 years isn't necessarily available now. And therefore, unit economics, path to profitability, cost efficiency is key. Those are definitely much more appealing for banks locally when you're starting to speak to them. But again, that's on the lending side. On the account opening side, I think that if banks, whether it's in the UAE, Saudi, Egypt, look to try and support innovation and startups, that the paperwork and the bureaucracy to being able to open a bank account and service those bank accounts gets minimized, then the reliance on having to use international banks can begin to get minimized. And I think that's a collaboration between the banking industry and the venture capital community to try and work out what is the risk appetite for supporting early stage companies in this space. But clearly, just making it more efficient and less time consuming to opening a bank account, that's separate to whatever the lending facilities and the risks associated with that, just to be able to access the cash for cash management services.
We've not got too much time with you, but quickly, doesn't the collapse of SVB actually tell us a little bit about the dangers of everyone banking in one place, too much exposure to one sector?
Absolutely. But I think, again, if you flip it on its head, it's because they were particularly supportive of the community. I think that even despite the collapse, if you speak to the venture capital community and the startups themselves, they only have positive things to say about the bank itself. However, the way that it necessarily ran some of their liabilities in this environment meant that exactly what you're saying, the concentration was a challenge. But again, it's because they were able to facilitate and support them, the market is why people use them as a bank of choice. The question becomes, are there other banks that can necessarily provide facilities or banking services to support this growing and important sector? That means that there's less concentration on one bank. A good example in the UK is HSBC acquiring the assets of SVB. HSBC has been known to support the startup community. Can similar banks help facilitate that and have less concentration on one particular bank of choice?
Thank you very much for joining us this morning. Phil Bahoshy is the founder and CEO of MAGNiTT, having a look at what the collapse of SVB could mean for the tech sector and its ability to raise or borrow funds.
Last Thursday, we celebrated female founders on Starting Up with Virtue Zone, the original founder of The Entertainer, Donna Benton, sharing her business advice, but also her biggest regrets in business as well. Listen, if you missed the podcast, head over to DubaiI1038.com and look for Starting Up with Virtue Zone. Join us again Thursday from 1.
Your ARN News
With Etihad Airways.